course of last year, I repeatedly warned you away from the online food delivery stocks, especially GrubHub. I was worried about a surge of venture capital-backed competition that forced the whole industry into a race to the bottom for pricing. And I was right. GrubHub stock got annihilated. When the company reported an ugly quarter at the end of October, the stock plunged from $58 to $33 practically overnight. Then it came roaring back from the strength of a Wall Street Journal story saying it is willing to put itself up for sale. At the same time, it has rolled out an incredibly impressive platform to digitize the crazy world of takeout. With technology, I can tell you, as a restaurant owner, I found quite intriguing. But the industry is still in a tough place and needs consolidation, which is why we wanted to check in with Matt Maloney. And Matt Maloney, you've seen him on the show. He is the founder and CEO of GrubHub. And we saw him at Art, Bird, and Whiskey Bar in New York's Grand Central Station this morning. It's owned by Joe Germanotta, who, fun fact, also happens to be Lady Gaga's dad. Take a look. Matt, tell us about the new ultimate technology and what it means for both diners and restaurateurs.
Jim, you know better than anyone else. Pickup sucks. We already revolutionized delivery, and now we're revolutionizing pickup. The days of walking into a restaurant and seeing those 10 people in line and having to stand there and wait and wait and wait until you can talk to someone, they're gone. So we have the whole new system which digitally integrates the ordering mechanism, the platforms, the front of the house and the back of the house, so you always know exactly when your order, where it is and when you can pick it up.
All right, so Joe runs this place. It's his place. Art, Bird, and Whiskey Bar. What does it do for him?
Well, so we're in Grand Central Station. There's thousands of people walking by every hour. People want to get their Art Bird, they want to get their whiskey, and they want to get their chicken, and so they can just walk up, they can pre-order on the train, on the Grub app. It immediately goes into their system, it hits the back of the house, they start prepping the food, they can watch the order right there. It turns green.
Where? On their handheld?
Yeah, on their device, anywhere they want. So if they want to pre-order, it's on the train. If they want to get here, there's a kiosk. They don't have to talk to someone. There's 4 of them lined up. We're going to walk through it in a minute. Just beep, beep, beep. They're done. They immediately see on the heads-up display their name, their order number. It's yellow or it's green. Go pick it up. So no more queuing up right here. You don't have to have the front of the staff.
No more all those people just waiting around while other people are eating. You see what those guys doing there?
That's the point. It's like a digital queue. It's what we've done for platforms and delivery. We're pulling it into pickup now, and then we're helping the restaurants be way more efficient.
This has got to work. Colleges, stadiums?
Yep, that's where it started. It started in colleges. We've been evolving on this for over 5 years. We're in Ohio State, Arizona University. We're in over 10 major universities, and we keep rolling out more. The point is, like, they have the students, they have 15 minutes in between classes. It's just bam, bam, bam. They have to get through as fast as possible. Stadiums, too. We're working on a lot of big stadium deals because nobody wants to go stand in the beer line and miss the game.
Nightmare.
You want to order from your seat. You know when it's ready. You just walk up there, grab it, and come back.
All right, so this is a great proposition. Can you get a stadium? Is anyone talking? I mean, you've got Ohio State. You've got,
yeah. We have nothing to announce right now, but I think very soon.
Where are you gonna, if you're not going to, where else are you going to announce it other than here?
But we'll come back.
All right, speaking of announcing.
Yeah.
Matt, October 28th, 2019, you announced that online diners are becoming more promiscuous.
It's a great word.
It's a great word, but people don't understand it. So you're going to describe it right now. Because I think a lot of people are like thrown by it.
I would say Google that word. But my point was, people are shopping on a lot of different platforms because ultimately the restaurants are getting commoditized. There's basically the same restaurants on the same platforms. They have the same menu items. They're basically the same price, and then the delivery mechanisms are basically the same. So how do you create
no loyalty, no scale?
Well, we're building loyalty. That was part of the letter you're referencing.
Right.
We said one of the advantages that we're going to lean into is that we have this massive loyalty infrastructure where we channel hundreds of millions of dollars from restaurants to give incentives to diners. And restaurants build loyalty through their programs, and so we give them the free loyalty
Matt,
tools.
You took a hit. I mean, the EBITDA numbers, you said you had to take them down. The stock had been down just a gigantic amount. The only reason why it stabilized, Matt, was a Wall Street Journal article that said you're for sale. Well, now, what happened there? If you're not for sale, how could a major publication say you are for sale? You're a pretty candid guy.
I'm a pretty candid guy.
I think so. It's a rhetorical question.
We had a no comment on the article, which is the appropriate thing to do.
They made it up? Like they got up in the morning and made it up?
I can't tell. I don't know who their sources were. They didn't share that with me.
But then immediately, what do I hear? I got guys like Credit Suisse. They're saying, you know what, $128. I mean, you're going to turn down $128 a share? That seemed like a pretty good deal.
The crazy thing about this story is, look, we're a public company. We have an obligation to review any valid offer, and of course we would. We haven't had any offers. And
so DoorDash and Postmates have not contacted you?
Well, my comment was we hadn't had any offers, and we're not seeking offers because we're really invested in the products like Ultimate that we're launching right now.
If Uber were to come to you, it would be an unbelievable consolidation. You can make a fortune for your shareholders. This seems like a logical proposition.
We would totally evaluate any offer.
But it hasn't happened.
But we haven't had one yet. And that was my point. We're not looking for one.
So they just
we think we're building an advantage.
All right, we're going to say that article was that's Philadelphia accent, and ill-advised.
I think they were barking up the wrong tree.
But the stock is still up because of that. Now, in order to be able to sustain the increase, I have to believe that this proposition is going to make it so that you are differentiated.
Yeah, look, it's widely documented over $250 billion in U.S. domestic takeout. Over half of that is pickup. And by the way, none of my competitors are addressing pickup.
Right.
And we've just unveiled a massively researched 5-year-long program to revolutionize pickup in all these high-velocity places that really need it.
Do any quick service restaurants want it, or is it really restaurants like mine and like Joe's here?
Look, the concept was first rolled out in high-velocity, massive-scale QSRs. I'm sure many people have used
Taco Bell in the morning after
pre-order.
kind of a big night out.
But that type of technology is not available to restaurants like yours or Joe's.
No, I know.
And so that's why we built this, to bring this to every other restaurant, because consumers love the convenience.
Okay, so what does it mean in terms of number of people you need at the restaurant, people to register, people who greet these people when they come in?
It changes your economics. I mean, you know the economics, front of house, back of house. You can take those front of house order takers, you can stick them in the back of the house so they can prep more food faster, higher quality, higher service for your customers.
When you're paying $18 an hour, we need that.
Yeah, as the minimum wage keeps increasing, that's better for restaurateurs.
Okay, so where are we in terms of the rollout? And why did we hear about it now?
We wanted to make sure it worked. We didn't want to roll out a bunch of technology just to have it fall over on itself. This stuff works. It is tested in Grand Central Station. You can't get a better live test than this location we're at right now. That's why I wanted to talk to you right here. We know this is working. We are rolling it out as fast as possible. We are taking names. Our queue to get this installed is hundreds long at this point.
Okay, here's something that galls me. I understand that DoorDash, which is highly unprofitable, is valued at somewhere between $7 and $8 billion. You're at $5 billion. That, I find is ridiculous because you're making money, obviously not at the level you were. Why don't you consolidate the industry yourself? You're an aggressive fella.
You know what?
What?
This is the difference between public and private valuations. The private valuations just based on nothing.
But they're crushing everybody. We heard it from Rich Allison at Domino's. I mean, they're unsustainable, aren't they?
If you're selling dollars for 80 cents, I feel like that's unsustainable, but it grows fast.
Well, do you think that if there were consolidation, your gross margins would go up, or is it just without this, it's just going to be race to the bottom?
Look, if you double your business with a highly unprofitable, you're gonna screw up your unit economics. So you got to figure out how to reconcile the business before you really see the benefits of consolidation. But I think what you're pointing out is there's a reckoning coming to the industry. I think it's going to be 2020.
Was WeWork the beginning of the reckoning, in your opinion?
I think so. I think we're already like 2 steps. I mean, we're in the early innings.
Right.
But what happens this year is going to be interesting.
But don't you think DoorDash wants to wipe you out? I mean, isn't that their purpose? I saw them try to wipe out Caviar before they bought it.
We're all competing. We're all competing extremely aggressively.
You think it's a level playing field?
I think the challenge is some competitors have a very limited runway of cash, whereas we don't. We are profitable. We have an unlimited runway of cash. I mean, Uber has a $10 billion runway of cash.
Yes.
I mean, you're talking massive scale versus 6 months of cash available.
All right, last question.
Something's got to happen.
There are thousands of restaurants, not as good as Joe's, of course, or maybe mine. Thousands that need this. Matt, you're a small company. How do you get this word out?
Jim Cramer.
Matt Maloney, founder and CEO of GrubHub.
Thanks, sir.
Good to see you, partner.
Good to see you again.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.